So this is the pension series in which I will cover around 8 major topics, including pension basics, employee contribution, self-employed contribution, contribution through your company, then benefits of pension, buying a commercial property through your pension, then critical pension mistake, and then finally withdrawal rules. So under each category, I have analyzed or I have considered a couple of points. Like under the pension basics, there are types of pension, what is auto enrollment, what is difference between state pension and private pension allowance, how much should I save into pension, types of tax savings. And under employee contribution, I have included the major things are salary sacrifice and private pension. For each video, I will reveal at the start of like what that video will include, and then at the end what we have covered. So this way you can understand what we have covered so far. So before making a start for this video, I would request you to watch my previous video on pension basics, both part 1 and part 2. It will help you to understand this video and of course coming videos in more detail. So there are major 3 ways in which employee can contribute into his or her pension contribution. The major one is obviously auto enrollment, which I already explained in my previous video, pension basic, for which you will find a link up there. Second one is salary sacrifice, and third one is private pension contribution. So in this video, my focus will be on salary sacrifice. That is equal to their pension contribution, and in return employer will also contribute the same amount into their pension pot. However, salary sacrifice arrangement must not reduce employee earnings below the national minimum wage rate, which you can see on your screen. Now the question is, why should I contribute into salary sacrifice? What are the benefits? There are many benefits both to you and your employer. Both will pay a less in national insurance contribution, and you as an employee will pay less in income tax. Other than these, there are several potential benefits which can be utilized via the salary sacrifice, which include employer and employee can contribute their tax saving into employee pension contribution pot, which obviously help employees to build their pension pot, a healthy pension pot for their future. Employers can offer a healthy or well-defined salary package for their employees, because salary sacrifice is an arrangement which does not offer by all employers. And final one is employers can reinvest the money that they have saved from tax into their business, which obviously helps them to expand their business. Okay, so now on your screen you can see salary of 70,000, on which an employee contribute a standard pension of 5% and employer contributions are 3% into employee pension pot. And on 70,000 you can see there's a tax of 29,878.20 and employee NI is 1567.50, employer NI is 9555.40. So if we compare these figures with a salary sacrifice, now on your screen you can see a salary sacrifice of £1,200. This salary sacrifice I take as a standard salary, like as an example, you can say where I just contribute £100 per month into employee contribution. So everything else is same. You can see there's a 70,000 salary per annum, 29,338.20 is a PAYE, and then same employee NI, employer NI. Now let's have a look on employer savings. So employer NI without pension is 9,555.40 and employer NI with salary sacrifice is 9,399.80. So the total tax savings are 165.60. Same goes with employees saving. Let's have a look on employees savings. Now employees will save on PAYE, income tax, as well as national insurance contribution. So PAYE without pension contribution is 29,878.20 and PAYE with pension contribution is 29,338.20. £532.20. So the total tax savings are £532, and employee NI with salary sacrifice is £1,567.50, and without salary sacrifice is £1,567.50, and with salary sacrifice is £1,543.50. So the total savings in terms of employee NI is £24, and then total employee saving including PAYE and employee NI are £556. Please bear in mind all of these savings are if you are sacrificing only £100 a month or £1,200 a year into your pension contribution pot, and for employers this employer NI contribution of £165.20 is only on one employee. Let's say if the company has an employees of 10, then the savings will be roughly £1,700, and let's suppose it's 100 employees, 1,000 employees, so on and so on. So you can imagine just for the £100 into salary sacrifice will help you to save a lot of tax in terms of national insurance contribution and income tax. Now let's move to a private pension. In my previous video pension basics, I explained a private pension in a bit. However, here I will just quickly go through the benefits and demonstrate how you as an employee get a benefit through the pension or private pension. A personal or private pension is a flexible, tax efficient way of saving into your long-term future. You can pay into your pension pot from the age of 18 until the age of 75 and start enjoying your savings as early as 55 years, and from 2028 it increases to 57 years. And on your pension contribution you will get a 20% tax relief at source when you contribute into your pension pot. However, if you are a higher or additional tax rate, you can get 40 or 45% addition of 20 or 25% tax relief by filing your tax return to HMRC, because this pension contribution or private pension contribution will help you to extend your basic band rate, which definitely help you to save a tax. Here is a demonstration. Let's say your salary is 70,000 before pension contribution. Your income tax will look like 70,000 is a salary income where person allowance was deducted £12,570 and basic band rate was 37,700, on which 20% was charged and remaining was charged on 40%. So your income tax liability is £1,432. Now let's consider you are contributing £10,000 into your pension pot. Now let's have a look how pension will work for you. Your income is 70,000, it remains same. Your personal allowance it remains same, £12,570. However, in the middle you can see your basic band rate has been increased by £10,000 to extent of 47,700, and your income tax liability of £1,432 becomes a refund of 568. So now with an example and practical demonstration you can understand how pension work in terms of employee contribution, and obviously the more you contribute the more tax you will save, not only in terms of extending the band rate in terms of your future savings, plus in terms of the pension growth that you will get over the time with a compound interest. So now let's have a quickly recap of the whole video. So in this video we have covered the major thing is obviously salary sacrifice, and along the way we also cover pension contribution or private pension contribution, by which we have seen how salary sacrifice help you as an employee and your employer to save national insurance contribution as well as income tax you as an employee. If you are here, please do not forget to like, comment and subscribe, and don't forget to share a video with your friends and colleagues. As always, hands ahead, salute until the next video.